The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
Nasdaq is freezing its plans for a crypto custody service, which was slated to go live in the second quarter of this year. Joining us now is Moses Singer, partner and former SEC Senior Trial Counsel, Howard Fischer. Welcome to the show, Howard.
Hi, good to be back. I was going to start off by saying, wow, it's a really interesting week in cryptocurrency, but I think that's the lead-in to every story or every week on cryptocurrency, the way things have been going the last year or so.
How it feels like every week is more interesting than the week before. I look forward to a boring one, and I think my co-hosts might agree.
No, I like guessing who's going to get indicted this week. That's my favorite game.
Well, there should be a pool on that. Yeah. We could probably create a securities product on that.
Yeah, maybe we could take.
Whoa. Gary, we're kidding.
Yeah. All right, Howard, let's talk about this news that came out of the Nasdaq yesterday, pausing on their crypto custody service. Talk to us about the significance here.
Look, Nasdaq has to be conservative, and as long as there is a significant amount of regulatory uncertainty about the state of crypto as to how it's regulated, whether it's a security, if it's a security, which government agency is going to be in charge of regulating, of getting records about it, of prosecuting violations. As long as that's the case, I think the major exchanges are going to be a little bit leery about taking any kind of regulatory risk. And I think Nasdaq's action is a reflection of that.
I have to ask this because the S in Nasdaq, last I remember, stands for securities, right? So that's kind of their business. So why are they so afraid? I mean, if anybody's going to do this kind of stuff, you'd think it would be somebody with the name security in their company. I don't know.
Well, I think part of the issue has to be that there is still a question as to whether this is a security. And as you know, there are all sorts of pending bills in Congress that would define it one way as a security, define it as not a security, define it as an accepted security, give regulatory authority to the CFTC, SEC, another SRO to be created. And so it's not the question of whether it is a security. It's a question of who decides that. When is that going to get decided? When are we going to have some regulatory certainty about this?
But one would think that of all the things, all the hurdles involved, that whether or not it is a security. So if it is a security, you got to be able to deal with securities. You'd think Nasdaq, that's kind of their business. That's something they can do easily. It shouldn't matter to them whether or not something's a security. I mean, if it is a security, if it turns out that crypto is the same as eggs in your refrigerator or something, it doesn't matter. They can kind of deal with it. They have the infrastructure. They have the regulatory approvals, all that kind of stuff. Why would they shy away from something that could be a security?
I think in some ways, ironically, the judge's recent decision in the Ripple case has created added levels of uncertainty because up until that point, the SEC had basically won every case or settled every case in which the question of what kind of assets were considered securities was determined. I think with the Ripple case, and that I guess we could call it a split decision,
if it's not a security, it shouldn't affect them, right? If it is a security, it shouldn't affect them. They have the infrastructure. I guess I'm wondering if is this sort of something they're saying to mask something else? Like there's some other concerns that maybe it's not so much regulatory, but there might be other issues.
Well, there certainly might be some kind of reputational issues at stake. I mean, one of the things we've seen is that a lot of the players in the digital asset space have been, how shall I put it, less than sterling when the full scale of the reputation comes out. Allegations about what was going on at FTX, for example, have colored a lot of people's view of the entire digital asset industry. So I think there may be some kind of concern about reputational damage and the effect that might have on Nasdaq. I mean, all of this is trying to parse tea leaves, essentially. Mm-hmm. But I think that part of it is that following the Ripple decision, there has been a renewed enthusiasm enthusiasm and momentum in Congress for some kind of bipartisan crypto bill. So part of this may be that seeing what's happened in that, seeing what's happening in Congress, that various actors are waiting to see if at some point, Congress finally moves and actually comes up with an agreed plan to regulate and to figure out who is going to have authority over this.
I mean, I feel like if that's Nasdaq's plan, they could be waiting for a while. but I guess the question here about Nasdaq is, what do you think the sort of symbolic repercussions are? Like, do you think this is going to scare away, other institutions or traditional finance, just because it doesn't necessarily send a very good message?
Well, it's weird because on one hand, you have the BlackRocks of the world saying that they want to come out with Bitcoin ETFs. So that is a form of institutional approval, which I think would make more nervous investors think, okay, well, if BlackRock is doing it, I guess it's good. On the other hand, we have Nasdaq saying, well, wait a second, maybe that's okay for BlackRock, but we're still a little nervous about this. So you're seeing a very odd confusion, which is actually not that odd when you consider that confusion is kind of the default state of how digital assets are regulated these days, at least in this country.
So Nasdaq previously applied for a New York Department of Financial Services to the New York Department of Financial Services for a limited purpose trust company license. Now they're saying that they're looking to get the necessary license. Any insight here on what kind of license they could be looking at or what regulators they might be working with?
I mean, I think anybody operating in this field is operating under an unfortunate circumstance of regulatory confusion. Take Coinbase, for example. Coinbase is regulated with the New York Department of Financial Services. They've registered with them. They have agreed to implement certain compliance regimes involving anti-money laundering and know your customer rules. So they're completely or working on being completely compliant with the New York state regulation. On the other hand, that didn't stop the U.S. SEC from suing them. So because we have this very weird distinction between federal regulators and state regulators, there is this problem where people in the digital asset space don't really know what to do, because you could fully comply with what New York State wants you to do, but that's not going to stop a federal agency from coming after you. And until there's some kind of regulatory certainty, that's going to continue to be the default state of digital assets. And there is going to continue to be that kind of uncertainty until Congress finally gets its act together and says, okay, here's what we've agreed to do. That might happen. I'm a little bit more optimistic of it happening now that the Ripple decision has incentivized Congress a little bit more to act. But I wouldn't necessarily hold my breath for a bipartisan accord in Congress right now.
All right. Speaking of the SEC, there was an exchange between Senator John Kennedy and SEC Chair Gensler yesterday on why the SEC did not nip the alleged fraud at failed crypto exchange FTX in the bud. Let's take a listen.
Where's the SEC? I mean, this was an accident waiting to happen. And I don't understand where the SEC was.
So, sir, I would say that the whole field has hurt more Americans than it should.
Yeah, but I'm talking about FTX. I mean, we can look back at FTX. I mean, Senator Durbin made this point. And we have this elaborate, complex regulatory machinery, the SEC, which I support, which is supposed to guarantee transparency and combat fraud. And any fair-minded person has to look at FTX and Mr. Bankman-Fried and these kids and go, what in God's, where was everybody?
All right, there was Senator Kennedy asking Gensler, where was the SEC when this industry was imploding at the end of this year? What were your thoughts when you saw that clip?
And so this is, as a former SEC prosecutor, this is one of the things that always used to bother me. It's that on one hand, the SEC gets criticized for being too aggressive, and on the other hand, they get criticized for not stopping frauds when they began. I'm going to go back in time to April 2023. April 2022, when it became known that the SEC had sent subpoenas out to, among others, FTX, and Representative Emmer, who was the chair of the blockchain caucus, strongly criticized Chairman Gensler for acting outside the scope of the agency's authorities and trying to strangle innovation in its infancy. So there was a lot of criticism at that point. And then when the FTX scandal broke, and kudos to your shop for actually being the ones to break that story. When that happened, Representative Emmer went back on Twitter and said, what's going on? Where was the FTC? So on one hand, there's always this kind of push-pull dynamic between Congress and the SEC, where it's criticized if it's acting too aggressively, and then it's criticized if it doesn't stop fraud before it happens. So, this is a dance that the Senate has gone through numerous times with the agency, and by this time, all of the dancers know the steps.
Well,
we asked this question a lot on the show, but most people don't have an answer, so maybe you do. The question is, everyone's like, Congress should act, Congress should act, Congress should do something, but what exactly should they do? There's so many ideas being floated around, and what exactly should Congress do to address this regulatory clarity problem that everybody is complaining about?
I think there are several things that Congress has to do. The most important is determining which regulator has final authority, whether it's the SEC, whether it's the CFTC with an expanded budget, whether it's a new agency, whether it's a self-regulatory agency. Someone has to be tasked with being the cop on the beat. The second thing that needs to be done is come up with what I'd like to think of as a Glass-Steagall equivalent for the digital assets world, and that is that you have these entities like Coinbase, like Binance, which are trying to be all things. They're trying to be exchanges. They're trying to be clearinghouses. They're trying to be broker-dealers. And those positions, those roles have inherent conflicts of interest. I think there has to be some kind of rule or legislation that says that you could do certain things. If you want to be an exchange, and here's what you have to do. You want to be a clearinghouse, here's what you have to do. You want to be the equivalent of a broker-dealer in the digital asset space, here's what you want to do. But you have to pick your lane. You have to pick what you're going to do and to do that. And then there have to be various disclosures associated with what role you pick and what you're going to do. But of course, that's all easy to say because there are significant disagreements just on the first issue as to who wants to, who's going to regulate it. And, on one hand, you have Democrats who are saying it should be the SEC, and then largely you have Republicans who say it should be the CFTC. And a lot of the momentum behind stripping the SEC of authority probably comes more from hostility to Chairman Gensler than to any kind of structural view as to which regulator should be appropriate. But, until we get agreement on who should be the regulator, I think that it's going to be very difficult to figure out what the scope of those regulations should be.
Yeah, but I guess, it doesn't totally solve the problem because, there's a good chance that in that case, the SEC would be the designated regulator. And that's not really the issue here. It's not that people are saying does the SEC have the power to do this or not? They just don't like what the SEC is saying. That's kind of the core problem here, right? There's this major disconnect between the SEC and the crypto industry, right? About the crypto industry basically saying that the SEC's view of securities is not compatible with digital assets, right? So just giving the SEC fuller authority definitely would not solve that problem, right? It would just kind of institutionalize it. So
I think further, the question of whether digital assets are securities is in some ways a distraction because we could agree to some kind of world in which, yes, they're treated as securities, but that treatment means that certain rules have to be implemented. So, for example, there has to be audited financials for crypto companies. There has to be, some kind of publication of, the various aspects of their business. There has to be some kind of reserves. Whether we treat digital assets as a security or not, that's only the first part of the equation. The hard part of the equation is saying, okay, if that's the case, then what's the next step? What do they have to do? What do they have to disclose? What measures do they need to implement? What kind of know your customer, anti-money laundering rules, for example, do they need to have? What kind of reserves do they need to have if they're going to have trading on their platforms? So I think in a lot of ways, the excessive focus on the securities aspect of it is in some ways a distraction from what may ultimately be the more complicated issues, which are, okay, let's say it's a security, let's say it's not, whatever the determination is, what comes next? And that may actually be the harder part of the process.
All right, Howard, we're going to have to leave it there. Thanks so much for joining the show this morning.
Oh, my pleasure.
That was Moses Singer, partner and former SEC senior trial counsel Howard Fischer.